If you've been put off investing because you think it's complicated, you think it's expensive, or you think it's for people that already have money, this video is going to undo all of that. I'm going to walk you through exactly how to set up Trading 212 step by step on screen so that you can go from zero to actually investing by the end of this video. We're doing it the smart way too, inside the stocks and shares ISA, so that every single penny of your growth is tax-free forever. By the end of this, you'll know how to open an account, what to actually invest in as a beginner, how pies work, how to automate your investing so that you never have to think about it again, and a few things that I wish somebody told me when I first started. So let's get into it. Now, there's actually loads of trading platforms out there, but the reason that I'm using Trading 212 is that it's commission free. So when you buy and sell ETFs and shares, there's no fees. It also lets you buy fractional shares, which matters a lot when you're a beginner because it allows you to buy a piece of, say, a £3,000 share for just £10. And critically for this video, it offers a stocks and shares ISA with no platform fees. That last point is actually the whole reason we're doing the video this way. So let's talk about that before we get into the app, because this is the most important part and people usually skip past it. When you invest outside of an ISA, so in a GIA, which stands for General Investment Account, any profit that you make on your investments is subject to capital gains tax. Similarly, if you are paid any dividends, that is subject to dividends tax. You do get tax-free allowances each year, but they are small, and once you are past them, HMRC is going to get their cut, and there is nothing you can do about it. A stocks and shares ISA removes all of that. There is completely no tax, no capital gains tax, and no dividends tax. You can turn £1,000 into £1 million and you won't pay a single penny of tax on that. The only limit to ISAs is how much you can pay in each year. So there's a £20,000 ISA allowance, and that's across all ISAs. So your stocks and shares ISA, your cash ISA, and your lifetime ISA, and it resets every 6th of April. There is genuinely no reason to invest in a GIA as a beginner in the UK when the ISA is sitting right there and it's tax-free. So everything that I show you in this video is going to be within an ISA. All right, now let's get into the app. I've got my phone here, and the first thing you want to do is obviously download Trading 212 from the App Store or Google Play if you've got an Android, or you can do it on desktop through their website. But I'll be doing it on mobile since that's how most of you will be using it on your day-to-day. Once you've downloaded it, it will ask you what type of account you want to open. You'll see options like Invest, ISA, and CFD. Please do not press CFD. That is leverage trading. It's not what we're doing here. And frankly, it's how a lot of people lose money quickly. Tap on Stocks ISA, as this will set you up with the Stocks and Shares ISA wrapper that we talked about previously. Once your ISA is open, you'll be asked to deposit money. You can do it by debit card or bank transfer. Bank transfer is usually instant or close to it with Trading 212. Once that is done, congratulations, you now have a stocks and shares ISA. That puts you ahead of most people in this country that just leave their money in a regular savings account, losing value to inflation. Okay, so now we're on to the question that I get asked more than anything else. I promise you, I get asked it every day on TikTok and Instagram. So now you've got money sitting in your account. What do you actually buy? And my answer is the same every single time. If I was a beginner starting today, I would buy a global index fund. And let me explain what an index fund is, because that term gets thrown around all the time and nobody actually explains it. So let me explain it. An index fund, or ETF, which stands for exchange traded fund, is an investment that holds hundreds or thousands of companies inside one single investment. So with a global index fund, instead of trying to pick an individual company that you think is going to do well, which even professional fund managers struggle with, by the way, you're buying a slice of the entire global economy. If the global economy grows over the next 10 or 20 or 30 years, which it has pretty consistently if you take any long stretch of history, then your investment grows with it. You're not betting on one company surviving. You are betting on human progress and the global economy continuing to function, which is about as safe a long-term bet as you can make in investing. This is why it's what I would pick as a beginner investor. It's diversified by default. You don't need to research individual companies. You don't need to check the news every day. And you don't need to panic when one stock has a bad quarter, because you're not relying on one single stock. Popular options in the UK include the Vanguard FTSE All World ETF or a similar global tracker. You'll see a few names pop up when you search global or all world in the app. They all do broadly the same thing: spread your money across the world, weighted mostly to the US because the US has the largest companies, but you'll see countries like the UK, Japan, China, and emerging markets too. If you tap into any of the ETFs in the app, you'll actually see the whole breakdown. So what countries you're invested in, what sectors, what individual companies make up the fund. And I genuinely recommend you do that before you buy anything, just so you know what you're actually buying. Okay, so how do you actually buy one? Well, first go to the search bar and search for the ETF using its name or its ticker. A ticker is just a short code, so you can search VWRP for one of the popular Vanguard global trackers. Then you tap on it and hit buy. And when you press buy, you'll see two options: buy it in shares or buy it in value. And that's because Trading 212 allows you to buy fractional shares, like we mentioned before. So you can enter something like 20 quid and it will buy you that exact value of the ETF. Mine's flashing red because I don't have enough money in my account. I'm broke. But once you've entered your amount, confirm the order, and that's it. You now own a globally diversified investment portfolio. That sentence might have sounded scary a few years ago, but now it takes like 15 seconds in Trading 212. Now let's talk about pies, because this is genuinely one of the best features that Trading 212 has, and it's why I switched my portfolio over from Vanguard this year. A pie is essentially a custom basket of investments that you can build yourself, so you can decide what percentage of your money goes into which ETF. So instead of, say, manually buying a global ETF and then manually buying another investment and then trying to calculate which proportion goes where, the pie does it all automatically now. So let's say, for example, that you want to build a pie and have 80% in a global index fund and then 20% in something else that you've researched. Let's just say the S&P 500. You can now build that pie and set the proportions, give it a name, and whenever you invest in it, Trading 212 will automatically split out your money into the proportions that you've set. You don't have to rebalance it every few weeks. It just keeps your portfolio in the percentages that you've set. For a beginner, honestly, you might not even need multiple investments in your pie at first. You could create the pie and then put a global index fund in it and set it at 100%. And it's actually going to help with what I'm about to show you next. Okay, so this part is, in my opinion, the single most important habit for actually building wealth, and this feature makes it effortless. Okay, so inside your pie, there's an AutoInvest feature, and this lets you set up a reoccurring deposit, weekly, monthly, whatever suits you. And it will automatically pull money from your bank and invest in your pie without you having to do anything extra. So you can set up, say, £50 a month, and on the day you choose, £50 will leave your bank and go into your pie in the proportions that you've set for your pie. So why does this actually matter? Well, there's two reasons. First, consistency beats timing. There's nobody on this planet that can tell you the exact best time to buy a stock, not even professionals. What actually works over the long term is putting in money consistently, regardless of what the stock market looks like. This is called dollar cost averaging, and the auto invest feature lets you do this automatically. The second reason is that it removes the temptation of wanting to spend the money elsewhere, and it also removes the friction of having to remember to do it, because I know if I had to remember to invest every single month, I just wouldn't. The people who build the most wealth over time generally aren't the ones trying to pick the best stocks every single day. It's just the people who invest consistently and leave it alone for a long period of time. Before I finish, I think there's a handful of things that are worth knowing as you get going. Firstly, a stocks and shares ISA invested in the markets is not a savings account. The value of your portfolio is going to go up and down depending on what you're investing in, sometimes by a nasty amount. But that is completely normal and expected, and the mistake that a lot of beginners make is panic selling their whole portfolio the first time they see red. Historically, markets that go down recover over a long enough time frame, but only if you stay invested through it. If you think you're going to need the money in, say, a year or two, you're better off keeping it in a high yield savings account rather than investing it. Also, Trading 212 has a practice account with virtual money if you want to get a feel for the app, how buying works, how pies work before you commit with real money. And finally, don't try to time the market. I know I touched on it before, but it's worth repeating as its own standalone point. The data consistently shows that time in the market beats time in the market, and waiting for the perfect entry before you start just usually means that you delay actually starting, and that delay has an actual cost. Okay, so let me bring it all together. Open a stocks and shares ISA so that every penny you make is tax-free forever. As a beginner, I would invest in a global index fund so that my investment is spread across the whole global economy. You can then put that into a pie and switch on AutoInvest so that the whole thing happens consistently without you having to remember to do it. That is genuinely it. That's the whole foundation. Everything more advanced, so individual stocks, sector ETFs, that all sits on top of this when you've got more experience and more research behind you. If this was useful to you, please drop a like and let me know in the comments. And similarly, if you've got any questions at all, drop that in the comments too. Follow me on my other platforms, Instagram, TikTok, everything loops lively, and I'll catch you on the next one. Stay lively.